Forex Market Review for February 25. Greetings. It's time to take stock of the currency wars from the front of the Forex market. What trends are outlined and what should be done now for currency pairs? What are the difficulties in trading currency pairs and how to solve them? You can find out about this in this review. Currency pair EUR/USD. The Fed chairman was able to calm the markets with his statement, and this affected the euro-dollar pair. The dollar is weakening from the rise in stock markets. This is explained by the fact that when measures are taken to support the economy, investors are investing in all the stock markets of the world, and not only in the American, and this weakens the dollar. When the markets are in a panic, then everyone is in a hurry to get out in cash and most often in dollars. But now for the currency pair, we continue our long way to renew highs. I have made a recommendation for a bullish engulfing trade, and while the trade is working, in time it comes out with us quite long term, but believe me, it's worth it and all the costs of swaps are leveled. A new bullish pin bar was formed on the exponential averages, which can be used as a way to additionally enter into a trade with the trend, but it is necessary to take into account the risks and mathematical expectation. If you are willing to take this risk, then this opportunity can be used. Currency pair GBP/USD. The pound dollar has already gone beyond its trend channel and, logically, it should already go down, but so far this has not happened. If you remember, we also managed to make good money on the movement of this currency pair, when we picked up entry signals from the lower trend line. The same tactics should be followed now, but so far there is no given signal. It seems tempting to start shorting right now, but I would strongly advise against doing this, since the trade will be against the trend. Remember, in order to increase the number of winning trades over losing trades, you need to select more confident and accurate signals. I am not saying that all transactions will be in profit, but a competent mathematical expectation and trading with an increased win rate can lead to success in the Forex market. Review of the US stock market. Yesterday, after the panic, many assets rushed to buy from the American market right at the time of the fall, and new growth can be expected. What is happening right now, you will find out in this review. S&P 500 Index. On the index chart, you can see that a bullish pin bar has formed, which suggests that the US stock market will continue to grow despite the panic. What happened to the companies we focused on in our reviews? Apple shares. Now is one of the best times to add more Apple stocks to your portfolio if you haven't. You know, I am often told that the US technical sector is overheated, that it is necessary to invest in the oil industry and the real economy. Moreover, basically such experts have not even been on the market for a year, but they already have a great idea of the overheating of those sectors. First, Apple has been in a drawdown for a long time since the moment of the report, and therefore it is clearly not the topic to judge overheating by it. Here the correction is clearly delaying. Secondly, the top favorites from FON, as attractive from a fundamental point of view, remain attractive. I strongly advise against listening to the grief of the experts who are investing in the industry when the crowd is. It was necessary to invest earlier, much earlier. But back to the Apple. Now Apple is at very attractive prices, and now you can safely pick them up. Yesterday the company was bought out after a large drawdown and the shares even went into plus, but it was almost enough to consolidate. The stock may spill a little more, but I am sure that you will not sell. The company, which is investing in new developments, has regained leadership in smartphone sales, which also achieved record profits. Lockheed Martin stock. What is now appropriate to look at is the military-industrial concern Lockheed Martin. It is the number one company in terms of the volume of defense contracts for the United States and its allies. Since the arrival of Joe Biden and the global economic crisis, many should already understand that a new war in some local region like the Middle East is inevitable, and therefore the exporters of democracy around the world will have a lot of work to do. An increase in the US military budget should have a positive effect on company stock, and a new war is even better. An interesting fact is that in recent years, more than one US president has not cut US military spending. On the technical side, the shares rolled back to the support level and were immediately bought back, also a good signal to buy into an investment portfolio. It is advisable to buy this company now. Tesla shares. And what about Tesla?
According to Tesla, we recommended trading the corridor, but alas, the recommendation was not crowned with success, because the corridor was broken.
However, in my reviews I wrote that according to Tesla it is necessary to ensure against sudden stop-loss movements. I really hope that you did not ignore my instructions in placing a stop-loss order and were able to get out of Tesla with less losses. No, in fact, it is difficult to say anything sensible about the situation with Tesla since the current drop turned out to be too large, and according to all multipliers, Tesla is still considered overvalued. I'd said that they should show a profit for another year so that all non-believers in Tesla would change their minds, but at the moment there is high volatility in the shares of this company. Of course, Tesla invested huge amounts of money in bitcoins, but then Tesla's shares are all the more subject to greater volatility.
One thing I can say for sure, Elon Musk has all the power of verbal interventions, because on Twitter with shares, that of Bitcoin, that Tesla, he can work wonders.
If you are not ready for such highly volatile positions, then you should bypass it. Overview of commodity markets. It's time to consider the situation in the commodity markets, as well as analyze everything that happens on assets that may be of interest to you. Gold. Gold has slowed down a bit in its recovery so far. I decided to consider this picture more carefully to give possible local developments. On the 4-hour chart, we can notice another pin bar that formed near the new support level, and this is a good enough signal for those who still like to actively manage their position. If you are a supporter of the fact that the position needs to be managed in the course of the transaction, then you can rearrange your stop loss behind the shadow of this pin bar and fix part of the profit.
To be honest, I myself would most likely make an exception in this regard, because the candles are formed by a double top, which can obviously work out in our direction.
If you made a deal in the long term, then you should not do anything, but if you have a medium-term, speculative position, then my advice this time is to rearrange the stop loss behind the shadow of this pin bar.
I know that in my review of currency markets I said the opposite for the euro-dollar, but in this case the situation is somewhat different, and therefore an exception can be applied here.
Platinum. Alas, the trade recommendation for platinum did not work, but all is not lost. Our stop loss was knocked out and most likely we will have to re-enter this position again. The price was shed again slightly and rushed to buy it out at the support level. A tailed candle was formed, after which a new growth began. Alas, market movements and speculative strategies can show quite annoying facts that we are unable to influence. We can often observe this when the price knocks down the stop loss and the price moves in our direction, but we are no longer in a trade. In this case, only risk management and a well-defined mathematical expectation save you, where take profit is 2 or 3 times higher than stop loss. This is the only way a speculator can show profit in the long term. My advice is to re-enter the trade if it is knocked out by stop loss. It still has potential. Silver.
As for silver, on the 4-hour chart, there is not quite a sure pullback to the price, or to be more precise, there is no clear picture that the main support level is holding the price, but let's take a look at an even younger picture up to 30 minutes.
The price slowed down for 30 minutes and we can see the buy-offs. I warn you right away that the smaller the chart, the weaker the signal.
If you do not like active trading, if you have not had experience of trading on lower time frames, then this signal should be skipped. Well, for the rest, I would recommend entering the long, where it is logical to place the stop loss behind the pin bar line at the local level, but the truth is, the expectation is safe here, rather than 1 to 3.
While the situation for silver is as follows, I do not see any other.